Morning, Andrew.
Morning, Chris. How are you?
I'm well, mate. I'm well. Back to it after a week or so away.
Yeah, it's hard to believe it's already mid-January, isn't it?
Yeah.
We're just about. Good break. How about you?
Yeah, it wasn't too bad. I keep saying to people I wish it was longer, but we're heading away for my wife's 40th next week, so it would have been a bit cheeky to take 3 weeks, be back for 2 weeks, and then take another 3 weeks.
Yeah.
So yeah, but all otherwise it was pretty good. We weren't ravaged by fire, so pretty lucky comparatively to others.
I mean, there's certainly parts of the state that have been very unfortunate over the last week or so.
Yeah, absolutely.
Yeah.
But market-wise, I feel like it's quiet, but it's not. This week has kind of kicked off a little bit, I suppose. But yeah. Yeah,
look, it's. I think equity markets in particular have started the new calendar year reasonably well, following a pretty soft end of the last calendar year.
Yeah, definitely. I think coming into that November period after having such a good run from April last year, not unexpected.
Yeah.
In terms of you can't have those sorts of runs forever, effectively. But then the traditional pre-Christmas, all financial participants go on holidays, and surprise, the things start to go reasonably well. And then now we're back into the middle of January, and Donald Trump's decided to shake the tin again.
Yeah, well, I don't think it'd be an update without mentioning Trump. Was 12 months in since he re-entered. So this time last year he was causing waves about early days about tariff announcements, and now he's front and centre with some geopolitical tensions.
Yeah, there seems to be no shortage of news in terms of what's going on and how he's shaping the world. So, if for those who are following along with the slide pack, and those who have been following the news, there's been a lot going on in Venezuela and Iran. So, I don't think that's necessarily a surprise to anyone that those things are happening. But I guess its impact on markets themselves are probably the thing that we're more focused on here.
Yeah, and certainly we've got some comments in a slide or two, but certainly the impact on markets at this stage has been relatively muted. So it hasn't been a lot play out. Firstly, with the US attack on Venezuela and the capture of the president, which by all accounts has been a long-standing military operation. Concern with basically accusing the president of narco-terrorism and drug importation or drug trafficking. So they're we've been after him for a little while and are now going to attempt to prosecute him.
Yeah, well, I guess, and he's been pretty. He hasn't been backward in coming forward in that being about the oil. So the sixth largest oil producer, I think, or 1/6 of the world's oil production there. I can't remember what the specific stat was, but a very big oil state, and having that to enable the US to disrupt sales to China and Russia, but then also, I guess, reallocate that oil across to US oil producers to refine it, obviously has some financial implications, and I guess geopolitical considerations, not complications as well. So
I think, and by extension, does it start to create a precedent for other world leaders to adopt similar sort of tactics?
Yeah, it's dangerous, isn't it?
Yeah.
I feel like we had a bit of a lull from April of last year. Maybe it was sort of lulled into a safer sense of security. But, obviously then subsequently we've had tensions in Iran as well, where we're looking at maybe an uprising to remove the leadership in Iran.
Yeah, well, lots of unrest over there with the I think it started with the fall in their local currency, which then translated into high prices and inflation, and the government has then responded with cancelled internet, I think, and so the masses are protesting, and that's caused a lot of casualties through the government's response through those protests. So as a result of that, Donald is getting involved in that as well.
Yeah, absolutely. Well, the last point around an escalation could see a surge in oil prices. the conspiracy theorist in me is like, oh, that's interesting. After the US have just come into possession of a whole bunch of oil that they might need to sell.
Right.
So look, it's obviously we don't really want to see rises in tensions around the world, but I guess there is a financial implication on all of this, right? So, oil prices are going to set the input costs on a whole range of things, which is then going to knock on to inflation down the line. And what does that then mean, for financial markets, for asset prices? There's lots of discussion about, the last, quote unquote, the last mile in inflation around the world. That's here and that's in the US, where we spent most of 2024 effectively trying to bring inflation under control. We got 3/4 of the way there, and that last mile, getting that last piece down, most of the developed economies have been battling with that. You think about it in a health context, getting those last few kilos off.
Yeah, that's right. Yeah, it's just it'd be a shame all that hard work to try and that's been put in place by the central banks to manage that inflation.
Yep.
And as you said, it has remained elevated. Hasn't quite got down to the desired levels. But
correct.
If things escalate and we do see that surge in global oil prices, or then the influence that'll have through energy prices and subsequently inflation could reignite another wave of global inflation. Let's hope it doesn't happen, but that's a possibility.
Yeah, I guess we'll see what happens. And I guess the last point there too is there is some worry about Trump and his, I was going to call it his attack, but I suppose his opening, or the Department of Justice opening the case into Jerome Powell. So I will discuss that when we get there, but that's also a bit of a key risk, I suppose.
Yeah.
But close to home in Australia?
Yeah, look, inflation, as we were just touching on, certainly in Australia, was, had been lowering, and the last couple of reads have seen inflation at elevated levels. Certainly much lower than what they were a few years ago.
Yeah, correct.
The year ending to October was 3.8%, improved a little bit in the year to ending in November to 3.4%, but remains still well above the RBA's desired target of 2 to 3%.
Yeah, correct. Yep.
And I guess now combined with the latest read on household consumption or consumer spending, which had a pretty strong result in the 12 months to November at 6.3%, against a forecast of 5.5%. So that was on the upside surprise. And the other comment around the spend is that it's the fastest monthly growth in October and November for 2 years. So it sort of, I guess it highlights that maybe there is a little bit of heating demand in the economy, and what that may mean then for the RBA, which is the next meeting is early February.
Yeah, well, it's a difficult period, isn't it, where probably pleased to see some lift in consumer spending, I suppose, because it says that people have maybe feeling like they've got a bit more income, because I know for a period there last year where, it was anecdotally, I think it was feeling there was a general sense of not negativity, but it would be pessimism, I suppose, is probably the right word. So it's nicer to maybe see that kind of turning around. But then obviously that has an impact where, if we start to see interest rates lifting again, what sort of impact that's going to have. And it feels like we're in a very could go either way position right now. So
and the risk, or the as we've spoken about in the past, that two-speed economy effect. So you've got the retirees, or those that don't hold a mortgage. Their risks are obviously a lot less versus a mortgage holder, and combined with the continued cost of living pressures, with if there is any further rate increases, then
it just makes it harder, doesn't it?
Just put a squeeze on those people.
Yeah, and again, anecdotally, it feels like there was quite a few layoffs in corporate towards the tail end of last year, and I'm not sure whether that's actually flow through into the unemployment figures just yet. But it's a bit of a watch this space, really. I think it was somewhat clearer over maybe not last year, but sort of the 2 years prior to that, where it was very clear what the direction of all of the policy was to reduce interest rates, bring the economies, I guess, back online, I suppose. And we've kind of done, 3/4 of the job, and now there's this kind of, well, where are we? It could go either way, and not having that clear direction, I think maybe makes people feel a little bit uncertain in terms of being able to have some sort of knowledge of what the future looks like, which makes people more hesitant potentially.
Yeah.
But look, it's just something that we'll continue to assess as the data comes out. But I've had this question a lot over the last couple of days with everything that's going on. Are we changing how we're allocating portfolios as a result of all of this?
Yeah. So our response typically to that is no.
Correct. Yep.
Stay the course. There's nothing certainly in the long term projections that indicate a need to change.
Yep.
And again, we say this quite often, but history is littered with some short term adverse news and economic updates, and it's just a case of sticking to the strategy, staying the course, and riding out. Even previously we were talking about the geopolitical tensions. Again, they happen all throughout history. If things escalate, any adverse movements to markets will be hopefully short term, and eventually things will return to some sort of normality.
Yeah, tend to play out.
Yeah.
Well, it's interesting because I know we sent out a communication at the back end of last year that we had just done our annual asset allocation review. So I guess the review of that, using Willis Towers Watson and all their expertise, looking into things like, are we going to see continued US exceptionalism, and what are the expected returns for developed markets? What about Europe? What about Asia? What about Australia? What about bonds? Like, what are the expected returns and risks? And there wasn't really a change in overall allocation. It was probably more a currency change about just preparing for maybe a less of a support in the US dollar as a reserve currency over a sort of 3 to 5 year time horizon. So I think the allocations of the portfolios in terms of how much, say, is in America, how much is in Australia, hasn't necessarily changed, even given what's going on. So we feel like we're pretty well positioned at the moment.
Yeah, I think so.
Interestingly, I was listening to a podcast this morning, and just basically saying on a sort of, I think it might have been a 6 to 9 month period, that there was a tech and AI was actually starting to underperform from an index perspective. So, there's whereas if we're going to call it the S&P 493, which is minus the seven big companies, which hasn't done so well, maybe comparatively anyway, over the last 5 years. That's kind of been the thing coming out of Willis Towers Watson, is everyone needs to remember that there's 500 companies, not 7.
Yes.
And that we realistically should start to see some good growth out of those companies, because cyclically they've been sort of not repressed, but just haven't been really showing reasonable outcomes. So, which is why we've continued to hold our US allocation the way that it is, because that is a question that I get quite a lot from clients.
Not surprising.
Because it's just the media focus, right?
Yeah, exactly. And again, it supports the index approach.
Correct.
As well.
Yeah, absolutely.
Gives you that full diversification.
Yep.
Rather than sort of a concentration in a handful of selected assets.
Yeah.
That might outperform for a period of time, but invariably it's always hard to beat the index or market.
It is. Well, and it's usually the things that are out of the media, so what I would call the non-sexy parts of the portfolio, that we need to continually, not just be reminded that does the heavy lifting of the outcomes. So, as you said, we're always going to have geopolitical tensions. There's always going to be noise. We just need to make sure that we're not reacting to that. I suppose. I don't want to dismiss it by saying jumping at shadows, but you can run the risk of doing that.
Yeah. I mean, it always feels real because it's in the moment.
Correct.
And it's in our nature to worry about these sort of things.
Yeah, that's right. Yep.
But equally, it's also about the long-term game.
Yep.
Yeah.
Yep. So in the more recent news, like in the last couple of days, to sort of mentioned before, Donald Trump's asked the Department of Justice to open a bit of a case into Jerome Powell to try and, because from a legislative standpoint, the president can't just remove the chair unless there's some sort of cause essentially for misconduct or. So I just wonder whether this is a politically motivated attempt at trying to create a cause to allow Trump to be able to remove Powell from his Fed chair position. Yeah,
we're seeing certainly it's been a theme over the last year or so, hasn't it?
Yep.
Whether it's I think there was even some comments in the middle of last year where I think he said he used the words wanting to fire him or sack him.
Yep.
So this is just another potential angle for him to play that or go down that path.
Yeah. For those who probably haven't been following along, this is about Trump wanting to lower interest rates rapidly to stimulate the economy and get things going really quickly. And obviously, the head of the Federal Reserve thinks that's irresponsible because that will then possibly push inflation, and then you get out of control inflation, and then you've got an economy full of risks. So Trump wants to lower rates. The Federal Reserve has decided against doing that. Trump obviously doesn't want that. He just wants to do what he wants to do. So thus he's then trying to politically assassinate him, I suppose. Interestingly, though, Powell's term as chair, not as a board member, his term as chair is up in April. And, there needs to be a new chair elected. And I don't think it's going to be Jerome Powell because the president normally puts forward a nomination. So it'll be interesting to see how that plays out. There's a whole gamut of and regulation around how the chair is actually voted in. Senate has to vote on it. And so there's been quite a lot of political machination between some renegade Republicans at the moment. So I think it'll be something to watch, but it'll definitely be in the news for the coming months whilst, this plays out until essentially we get a new head of the Federal Reserve.
Yeah. And the ramifications of any influence that the Trump administration imparts on the composition of the Fed as well.
Yeah, absolutely.
Starts playing to the independence if there's a bit of influence there.
Yeah, correct. Well, and I guess if you look at it and then, he gets a puppet installed and rates drop, well, then there's going to be a risk of inflation spiking, and that is then going to have real-world implications on financial asset valuations and financial markets. So we will be across it, but I think it's just something to flag for some news that people should expect to be continuing to hear into the coming months, and try not to react to maybe the sensationalist extrapolations of a certain set of circumstances until reality actually happens.
Yeah, then you know what you're dealing with.
Yeah, correct. Yep. All right, well, I think that probably wraps us up for January.
It does, yeah.
I know next month we've got Willis Towers Watson coming in to do a review of asset classes and asset performance for 2025 calendar year, and for what that potentially might look like in calendar year 2026. So I think that'll be really interesting. I guess we might see you in March and beyond.
Yep.
Okay.
Look forward to should be a good listen that next month.
Next month will be actually really interesting. Yep. So I think for those who are listening or watching to this, it'll be a good one to tune into.
Yep.
Excellent. All right. Thanks, Andrew.
Thanks, Chris, and enjoy your holiday.
Yeah, thank you.